Good morning. It's a briefing for Tuesday the 6th of September. Let's just take a quick run through then of some of the overnight news flow and what to look out for today. In summary, not a hell of a lot's gone on overnight, chiefly down to the reason it was a US holiday yesterday. Generally speaking, this is quite normal activity for the financial markets when the US are out. As you saw yesterday, you had a lot of price activity in the morning in the European session. But come the time we go into the North American crossover, with the lack of participation that side of the pond, very quiet markets and certainly news flow. News agencies like Bloomberg, for instance, the employees also observing that holiday, and so the news flow from a financial news point of view just grinds to a bit of a halt. Just sharing with you some charts though here on my screen. Hopefully you can see that using the new software at the moment. And just a quick word of warning as well in regards to if you're looking at your ladders this morning and you're seeing existing P&Ls, that's down to the fact that there wasn't a settlement last night because of the US holiday, so you have to just ignore that for today. But just looking at these charts then, starting off with crude oil, obviously there was that big move yesterday which happened pretty quickly. I know we talked about this in detail yesterday, but just recapping it again, there's that video on our Facebook page if you'd like to recap how Will traded the event, because a lot of it was quite intuitive actually, just in terms of the way he was looking at the market. That initial first spike, obviously that coincided with actually no news at all, and then it started to circulate a couple of Twitter accounts talking about a quake in Oklahoma, which we know is a key geographic area in North America, that would have strong ramifications for the oil market. But then that was actually a dated event. It happened earlier in the weekend, but just goes to show European reactions to very North American specific news can have an impact on the markets. When there's no US people in, certainly Europe just reacts to what it sees and hears, and when the rumour mill is rife, people also follow the momentum, which is certainly how Will traded a large portion of that move yesterday. Then the actual Saudi going to make a significant announcement. Then it was Saudi rumours of a cooperation with Russia, and then that was when we surged some 5% until these initial highs that were seen up at around 46, 53 type area. And then, of course, as we saw, they announced nothing. A corporation of technology of sorts, so a disappointment from what the market had priced in, and then we pared back a majority of that move. Now, this morning, we've just had some comments around 5 minutes ago. A meeting between the OPEC Secretary General and Iran's oil minister has started now in Iran. Oil prices have seen a little bit of a downtick here since they've started speaking. Just remember, when you're trading the news on these oil events, the key thing is to know who the real players are, and certainly Saudi Arabia, from their head of OPEC point of view, let's say, they're the real power player, and then Russia is the power player from the non-OPEC camp. But then Iran is also, although from a production point of view not as powerful, from a cohesion point of view of OPEC actually coming together and making a collective decision, then Iran are important, because Iran are the ones that always cause a bit of a headache from a Saudi perspective. So just keep an eye on these comments. It will be interesting to see what they have to say. Nothing's been added that I can see so far on Twitter or the news feeds, but oil certainly has seen a slight downtick here. Maybe finding a little bit of support around that initial R1 level. But again, these pivots may be a bit out of whack, just given the lack of settlement from yesterday. Just taking a quick look at some of the other charts. Got the S&P here on top left. Not really doing a hell of a lot at the moment, just again because of the US holiday yesterday. No real firm volumes going through. Expect that to change today though. We do have some more important economic data coming up. We'll get onto that shortly. So pivot holding up thus far in the overnight or yesterday's session, and then going through into today. Again, you've got the near-term upside levels at around 82.25 level, This, of course, was the payroll move higher, sitting just above there at 83 and 3/4 is probably your next kind of upside level, and then pivot downside if that is still relevant today. From cable's perspective, let me just share with you, if I can just transition my screen. This was the UK service PMI data from yesterday, and this was a massive surprise for the market. You can see here the, as expected, sharp deterioration that we saw in the July reading, which everyone was waiting for to really gauge the impact of, or the true impact of Brexit, given the fact that July's data would have been the full first reading, and that was a big kind of nosedive from plus 52 all the way down to the contractionary below 50 and sub 48 level. The surprising thing was yesterday, and remember, we saw an extremely strong manufacturing number last week, but services is more important in the UK, as we know it makes up the larger proportion of how the kind of economy is structured. And yesterday it came in at 52.9. Expectations were for 50. Output new business recovered, job creation resumed, import prices rose, the most since November 2013. Expectations improved from July's 89-month low. So, this is important for the pound. I think I remember there was a chap on CNBC a few weeks ago talking about cable going back to 135. I can't remember his name. Ben, can you remember his name? I think it might have been Piers Morgan. No, it was Piers Corrin, our head of trading. He was talking about the fact that Brexit has not been, as far as economic data is concerned, as bad as expected. And at this point, it's certainly been ratified, or his view, by these latest data points that have come out of being a huge bounce back from what we've seen from the initial data in July. And so at this point, looking at the cable chart here, the reason really 135 is significant is because 135 was kind of the resistance level that we saw after the big push lower on the night of Brexit. We then came down to lows, we're looking at 128.06 type levels, and then we bounced back in mid-July. Again, that 135 level was significant. So, we're trading at 133.45. It still seems at this point that an ultimate test of 135 is on the cards in the coming weeks. So certainly that's going to be a big marker in the sand when we get to that point, because then it's about, well, how much of this Brexit-inspired sell-off do we then start to recover once 135 has been broken, if that is the case. The other important thing, though, that strong UK data does is it has to be taken into account for the ECB interest rate decision, which is happening on this Thursday. Because one of the ECB's big decisions, and the market is pretty evenly split amongst economists' view, is whether or not at this point, i.e. the September meeting, do they need to alter their QE program, i.e. make it more expansionary, provide further stimulus to the market. Now, a lot of this is hinged upon the strength of the UK economy, because if you remember rightly, there was a lot of fears about the potential contagion effect that could have on Europe. The only difference is that actually the UK is performing much better than expected in the wake of Brexit. So therefore, does that lessen the need for the ECB to take any type of immediate action, at least at this point? Surely it would be better for them to sit on their hands and see whether or not there's any kind of delayed impact in the data set. The other thing is, as well, as I was saying yesterday, you're kind of on a direction of a hawkish Fed, indicating that September is certainly not priced in, but certainly not off the table, and December, it could still be a viable option for them. And if the dollar is going to strengthen, if the pound's going to strengthen, then the euro is going to weaken, then also that's going to help out and act as a stimulative measure for the European economy as well, and again lessen the need for the ECB to take action this Thursday. So it'd be interesting to see how that plays out. Let me just share with you the German factory orders. They did come out earlier this morning. I mean, looking at German factory orders on a data set on a historical basis, it's a bit of a mess, to be honest with you. I don't think it really tells you too much, given that every other month is pretty much a swing between positives and negatives. In summary, in terms of the data itself, it came in at 0.2%. As you can see here, that was actually below expectations of 0.5. The year-on-year minus 0.7%, so it was a little bit soft. Just taking a look though at the calendar for today. Overnight you did have the RBA rate decision. No real great shakes there. I think it was Stephen's last actual meeting as the governor. No change in rates there, so rates left at 1.5%. Looking forward though, now factory orders from Germany are out of the way, the rest of the morning is pretty quiet. I mean, just looking, let me just switch back to the charts for a second. Looking back to the DAX here on a 5-minute, you can see absolutely no direction at this point. These kind of big wicks as well would indicate to me there's a little bit of indecisiveness in the market. That's chiefly because now that there's, as I said, there's nothing really coming out of Europe. What the market is really concerned about now is, will the Fed hike in September? Now, we had those two big events. You had Janet Yellen's Jackson Hole Symposium speech, and you had non-farm payrolls. Now, she was, let's say, hawkish in Jackson Hole in the fact that Fisher came out to kind of rectify that and put across their intentions that they're committed to the possibility of a September hike. And their non-farm payrolls, although was not fantastic by any means, certainly does keep the door open for a potential hike. This then means that economic data out of the US still carries quite a large degree of importance, because we're looking for the final kind of pieces of the puzzle in order to say, is the US economy strong enough to actually pull the trigger on the 21st of September? So you've got 2 data points later on this afternoon, 2:45 and 3 o'clock. Make sure you are at your desks. You've got service PMI 2:45. More importantly, the ISM non-manufacturing PMI. That comes out at 3 o'clock. Taking a quick look at that data more recently, the index last time fell 1 percentage point and was below market expectations. It was at 55.5. Expectations were for 56. Business activity and employment expanded at a slower pace, while net orders increased further. So I guess at this point, from looking at the last 12 months on this particular piece of economic data, I mean, the Fed will want to be seeing consistent, and from a market point of view, certainly up at some of the best levels of 2016, if it's to really shift further some expectations of the market to further lift the pricing and the probability of a September hike. I would say you need to get a number really of 57 or above. Any number that starts to come back down towards the kind of May area, which is more akin to yearly lows down closer to 52, again, the reverse starts to happen. We could see some further dollar weakness as September is kind of pushed further out of the picture. Otherwise, calendar, that's pretty much it. There's no other scheduled speakers of note. I would be, as I've said at the beginning of this briefing, a little bit cautious on the oil markets, just because of what we saw yesterday. I still believe we have the unofficial meeting of OPEC, non-OPEC names in Algiers later this month, ahead of the official formal OPEC meeting. I think it's in November. I would expect more source comments are going to be forthcoming. It's just a question of when do they come. But you saw how the market really moved yesterday. It's about just being open to the prospect that it could come at any time. And then if you are trading the news, you have to have conviction and quick reactions. And you can only have that if you're kind of semi-locked in to listening to the squawk and keeping an eye on the news as well as you go through the session. Okay guys, going to leave it with that. So enjoy your session, and I'll catch you in the new chat room. Thanks.